Welcome everybody. Tonight we've got the great pleasure of having Mark back with us. And the reason we like to have Mark on is because his trading methods are what I say are consistent with candlesticks. They're very simple and easy to understand. And his indicators are so well accepted that they're basically part of the indicators for, is it the NASDAQ exchange, Mark?
NASDAQ, stockcharts.com. Yep, we've been blessed.
All right. So with that, Mark is one of your professional traders. He's been around for 40 some odd years. So with that, I'm going to let him start right out. Mark, welcome again to the Candlestick Forum. We're anxious to see some of your techniques.
Steve, thank you very much, and thanks to Becky and Jim for getting us set up, and welcome everybody. Today's webinar is entitled How to Make Money in a Volatile Market, and the answer is very simple. To me, you make money in a volatile market by having a directional edge, and we're going to show you two proprietary Chaikin indicators, one fundamentally based, one technically based, that give you a directional edge. And I'll show you how this is so compatible with Candlestick Forum, as Steve mentioned, and that's why I think this is a wonderful partnership that's working both ways. Our audience loves the candlestick work, and hopefully you, based on past experience, will appreciate what we offer here at Chaikin. A little bit of housekeeping. Chaikin's not registered as a broker-dealer or with any federal or state agencies, so any of the stocks we talk about are not meant to be recommendations to purchase stocks, but are educational in nature, and that ends the housekeeping. So Chaikin Analytics makes volatility work for you. We do that by helping you zero in on winning stocks and helping you play good defense by pointing out the stocks that you should be avoiding, and then we'll show you how you can turn lemons into lemonade when you're playing good defense. And the way we do this is by focusing on fundamentals. So 85% of the Chaikin Power Gauge rating, which is our quantitative model, is fundamentally driven. 15% is proprietary technical analysis, and the result is a quantitative model that finds a lot of different ways to be bullish about a stock and a lot of different ways to be bearish about a stock. And then finally, we have 6 pairs of buy and sell alerts to help improve your exits and entries. And one of the reasons I love this partnership we have with Candlestick Forum is that Steve has some of the best entry signals on the planet with the various candle patterns that he's identified over the years. So the reason I created the Chaikin Power Gauge rating, the reason I started the company after the crash of '08 is that there's too much darn information out there. We're flooded with information, and we can drown in it. And here's an example of that. This is the kind of fundamental data that institutional investors look at every day. It happens to be on a stock called Sunoco Logistics, and there are 9 different ratios and 7 different scores on this screen. I defy anybody out there to make a profitable investment decision based on what's on this screen. But somehow this is what the big institutional investors who move the markets look at. That's how they make their decisions, whether they're pure fundamental analysts or whether they're quantitatively driven. So much money is driven by quantitative models like ours now. This is what they look at. But for you and I, how do you cut through the clutter? It's impossible with all this information overload, which is the real problem we face in our daily lives and in our market analysis, to cut through the clutter. Well, here's how we do it. We've created the Chaikin Power Gauge rating. It's a gauge, looks like the gas gauge on your car. It goes from very bearish or red to very bullish or green. We've taken the same data that you saw on the previous screen, and we've distilled it down, as you'll see in the next slide, to 20 factors in 4 components. It's powerful. It's proven itself. It works. And it's all distilled down to a rating that anybody can understand. Now, the reason I feel confident saying that it works is that it's been live in real time with no modifications for over 4 years. And the Chaikin Power Gauge rating is a clear, unequivocal summary of a stock's potential to outperform or underperform the market 3 to 6 months. Now, in case you think that that's a long time framework if you're a trader, we're going to show you how that's not the right takeaway. The right takeaway is the stocks that are going to outperform the market over the next 3 to 6 months are also the stocks that are likely to do well today. Because the way they get to outperform the market and go up big or go down big is because of daily buying and selling. So a little bit on the 20 factors. I've been on Wall Street for 48 years, work with institutional investors with my Chaikin money flow and relative strength. Basically, taught them how to use technical analysis in combination with a fundamentally driven bias that they all had, whether they were value investors, growth investors, momentum investors. I think Steve and I feel similarly about this, but he is a little more clear-cut that you don't need the fundamentals if you master the candle patterns and things like his T-line and his fry pan bottom. And he's probably right. When I was promoting Chaikin money flow and our relative strength back in the 80s and the 90s, I knew that the fundamentals drove the market. The big institutions drive the market. And although they look at charts, they're driven by fundamental factors. So what I did in a one-year research project was distill 200 factors down to 20 that work and play well together. Remember that old report card you got in grade school? I used to do well on the academic stuff, but on the penmanship and on the works and plays well with others, not so good. Well, these factors work and play well together in that sandbox. So the financials are 35% of the model, and they're what Warren Buffett looks at. These are the value metrics that drive Graham and Dodd, Warren Buffett, and a lot of other successful investors. The two most important ones are free cash flow, because as a lot of people have said, you can manipulate earnings, but you can't manipulate cash flow. You've either got it at the end of the year or you don't. And then price to sales ratio. That is the secret sauce in our model, and it's the secret sauce in some very successful money managers' models. If you pay too much for $1 of revenue, no matter how good the patterns are, you're on a high wire act without a safety net. You're okay until something goes wrong, and we've seen over the last 3 years myriad examples of companies where things have gone wrong. And if all you're doing as a momentum investor is buying the price action without having the fundamentals to back you up, you can fall off that high wire and you really are at risk. Earnings factors, fairly standard. They're what a Jim Cramer will look at, although we look at earnings surprise, and we saw 3 or 4 or 5 examples of that in the last 2 days. Companies report better than expected earnings or worse than expected earnings. That drives analyst estimate revisions. That's in the expert opinion section. That's the biggest short-term driver of stock price movement. So we've got technicals, only 15% of the model, although on the charts that you'll see how we combine technicals with the model to give you the kinds of filters that help you zero in on the winning trades that the candle patterns and the T-line patterns are going to help you get into. Then finally, we've got the expert opinions. I really believe this is our secret sauce. We look at analysts 2 different ways. Are they raising or lowering their opinions, and are they raising or lowering their estimates, their earnings estimates on a stock? Because that does drive stock price movement. Then we zero in on 2 key indicators that aren't normally in quantitative models. Short interest, smartest people in the world. Very tough to make money in a 6-year bull market if you have to go short. They find a way to do it ultimately because they're looking for fraud and overvaluation, and sometimes they're early, but they're usually right. And then we look at insiders to see if they're buying their own stock. Now, I know we've got a lot of sophisticated people on this webinar. If you think you know why insider buying is an important tip-off, please type Y in your question box. And I see we've got a lot of Ys in there, and so we've got some wise people on the webinar. That's about as droll as my jokes get. The reason insider buying is important is because insiders are well compensated. They got big compensation packages that include stock options, salary, golden parachutes, you name it. If they take their wallet out and write a check and buy their own stock, they do it for only one reason, because they think that stock is going up, and they think it's going up right now, because they don't have to buy their own stock. So very important. Then finally, within expert opinions, industry group relative strength. This is a way to get a tailwind on your long positions and avoid the headwinds of the weak industry groups. So how do we validate the model? Well, this is the performance of the model from January of 99 through the end of 14. We finalized the model at the end of 2010. So since that time, the model has not changed, and we have real-time performance on our website, chaikinanalytics.com, but I thought I'd put the chart up because it's very illustrative of what we're going to be looking at. You always have choices in the stock market. The very bullish stocks in the Russell 3000, 428 of them every month, averaged 21.55% annualized compounded return. And the very bearish stocks over this 15-year period, even including the 6-year bull market that we're in, were down. So if you make the choice to buy a very bearish stock, you're bucking big headwinds. Instead, you should be looking for very bullish stocks, and when we show you the charts, you'll see how easy it is to know based on the Chaikin Power Gauge rating. The other validation of the Chaikin Power Gauge rating, as Stephen mentioned, is that on April 1st, 2014, NASDAQ, after having spent 6 months evaluating the Chaikin Power Gauge rating, our 20-factor quantity, determined that this model added alpha. So what is alpha? Well, it means that the stock is going to go up more than the market, not based on volatility, but based on fundamentals. So on April 1st of 14, we launched 3 co-branded NASDAQ Chaikin Power Indexes, large cap, small cap, and dividend achievers. The ground rules were simple. NASDAQ has these underlying indexes. They wanted us to filter down using the power gauge rating and a couple of rules to a smaller subset to see if those power indexes would outperform their benchmarks. And they did. And the ground rules were also pretty onerous. Couldn't change any of the components in the index for 1 year. So this was a fixed portfolio that you had to hold for a year. The large cap index outperformed its benchmark by 500 basis points. That means the NASDAQ large cap index equates to the S&P 500 was up 10%, and our Chaikin NASDAQ Power Index was up 15%. Same with the small caps, 480 basis point improvement, dividend achievers 220. Why is this important? Because it validates the fact that you can use the Chaikin Power Gauge rating in 2 ways, as a lens to filter ideas and as a GPS to find winning and losing stocks. And we've boiled this all down to a 5-step methodology. Very simple. Find a methodology you can trust. Now, most of you believe in the candlestick methodology. So do I. The T-line is a fabulous complement to that. I've used that 8-period exponential average for 10 years, so kudos for Steve to sharing that with you. Second step is play good offense to find big winners. You can do that by following the third step, which is to focus on strong sectors and industry groups. Fourth step is to play good defense to avoid landmines. You don't want stocks to blow up and destroy all the good work that you've accomplished in a given year. And then finally, you got to know when to buy and sell. We give you some buy and sell signals. Candlestick is really excellent at that. That's why this is such a compatible approach. So the Chaikin methodology can be distilled down to this pyramid. At the top of the pyramid is that power gauge rating. It's a simple display, but don't confuse simple with simplistic. What I like to say is, because it's got those 20 factors, this is like a Chevrolet with a Ferrari engine under the hood. At the bottom of the pyramid, 2 technical indicators, both proprietary, Chaikin money flow and Chaikin relative strength, that work very well with the power gauge. And then in the middle, that sweet spot, the buy and sell signals, you could blank that out, white it out, and substitute the candlestick signals. And it works even better. So this is a very, very compact approach to making money as a trader or an investor on the long side or the short side in stocks or options. Now, as we look at the examples, I want you to think of the Chaikin Power Gauge rating as a GPS for stocks. It's available on desktop, iPad, and iPhone. And it points you in the right direction. I want you to come away. That's one of the takeaways. You can use it as a filter, or you can use it to find the best stocks and avoid the worst stocks, just like you can your Google Maps app to avoid traffic and find the best route. So we'll start out by looking at what we call the Chaikin Classic Bull. Distilled it down to just 3 components. Bullish power gauge rating. We're using Skyworks as an example. Steve used an example on Tuesday of Skyworks down in the 10-20 area when it turned bullish initially. We're going to blow this up in a minute. We want relative strength to the market, relative performance to be strong. Now you can get this in Investors Business Daily as a number from 1 to 99, but numbers are what contribute to the information overload problem. That's what you saw on that quantitative screen. Then finally, Chaikin Money Flow, which I created 30 years ago, tracks the big institutions as they move in and out of stocks. It's really powerful, and I'm going to give you a pattern, a tip-off on the next slide that we've been teaching institutional investors for years. And it's a really powerful tell. You know, in the poker world, they talk about tells. To be a good tournament poker player or even a good amateur poker player, you got to be able to read the people at the table. And professionals do it with something they call a tell, a little tick or a mannerism that gives away whether you've got a strong hand or a weak hand or bluffing or not. So let's blow this chart of Skyworks up and look at what we give you. At the bottom, Chaikin Power Gauge rating fluctuates from red to green, as I said in the beginning. In this case, Skyworks has had a bullish power gauge rating for almost 2 years, going down under 20. We're looking at a 1-year chart which shows Skyworks going from 45 to over 100. Power gauge rating was either bullish or neutral. Neutral is okay as long as relative strength to the market is green. So here's where we differ from Investors Business Daily and a lot of other people who give you relative strength numbers. We make it visual. If it's green, it's bullish. It's outperforming the market. We look at a 6-month time framework, but we also do something called persistency. It's almost like a stochastic of relative strength. Very powerful, and it can turn at the right time as the stock is breaking out. Then finally, Chaikin Money Flow. Now, Chaikin Money Flow, as many of you know, typically fluctuates from green to red and back again around the 0 line. So that's normal. What's not normal is when a stock corrects like Skyworks did last summer for 4 weeks, has a 10% correction or a sideways correction, and Chaikin Money Flow stays green or positive above that 0 line. That's the tell. That is your tip-off that institutions are using that weakness to accumulate the stock. To the weakness, they're taking advantage of it. This is how you become the smart money. I've done webinars called You Can Become the Smart Money. You don't have to wait to read about it in Barron's or hear Jim Cramer on CNBC or listen to some guru. You can become the smart money just by following Chaikin Money Flow and this discipline, and then using your candlestick entries to time very profitable option and stock positions. So look what happens in Skyworks. You've got everything lined up here in the summer of 14. Now, why is that? Well, Skyworks passes the smell test. I think that's really important. I think it's important for your conviction level and your ability to pull the trigger on trades to understand why a stock is likely to go up. It should make some sense. If there's no rhyme or reason, I'd pass on that name. Skyworks makes chips for the iPhone 6 and other devices. So it made sense, given the fact that they had reported 4 or 6 or 8 quarters in a row of better than expected earnings, that with the iPhone 6 due out here in September, that Skyworks would be under accumulation. And sure enough, we made this our bullish stock of the week in Market Insights, which comes bundled with this whole Chaikin Analytics package. right ahead of that earnings report. The stock was 47.58. Now, you might say, well, gee, you told me it first turned bullish under 20. Well, one of the lessons I want you to take away from this webinar is there's no price that's too high to pay for a stock where everything is positive, and there's no price too low to sell a stock that's breaking down where everything is negative. So we recommended Skyworks at 47.58. They reported better than expected earnings for the 9th quarter in a row. It spiked up to 54. Now, the only real weakness in this chart came during the Ebola panic when everything went down. But you barely got any selling because people wanted to be long Skyworks. The iPhone 6 had come out. It was a winner. And you got that over and over again here in the fall and early part of 2015. Chaikin money flow stayed positive even when the stock corrected. That's your tip-off. You want to find any excuse in the world in that candlestick 12 pattern continuum that Steve teaches. You want to find a way to buy the stock. We have buy signals. These are called our oversold buys. I owe this one to Larry Williams. Very simple. If the power gauge is bullish and you make an 8-day low and get oversold, that's a buy signal. When everything is lined up, when you've got bullish power gauge rating, meaning the fundamentals are behind you, they're supporting it, it's outperforming the market, and Chaikin money flow is green or positive, and you get a pullback, that's a buying opportunity. Now, what's happened recently in Skyworks? First of all, it hasn't made a new high. It was actually down when I pulled this chart earlier today, even though the market rallied nicely. And today, by the way, it was a great example of this whole theme. How do you make money in a volatile market? The futures were down big, 0.6%. They were down 12 points in pre-market trading. Then they were down 6 points. Market opened lower and then turned up. Still ran into resistance, as it's been doing for the last couple of weeks, but finished the day higher. You've got to be able to deal with that. Chaikin power gauge helps you. So what's changed in Skyworks? Well, fundamentals are still great for the company. They keep reporting better than expected earnings, but they added this stock to the S&P 500. Could be the kiss of death, because every index fund in the world had to establish a position in this stock. The buyers are pretty much spent, and it's going to take a big, big, big quarter to move this stock to new highs. Not necessarily a stock that you want to get out of yet, but you want to have a close stop. You want to use that T-line, whatever mechanism you use to protect the profit. If you are in, as a lot of our subscribers were back here at 47 or re-entry buy, now's the time to do that, because by adding it to the S&P 500, it basically exhausted all the buying power, and the sellers are in a position to push the stock down. Now, the fundamentals are so strong that's unlikely. Now let's look at a classic bear, and we're using Pandora as our example. Now, Pandora is a stock with a bearish power gauge rating, weak performance relative to the market, and weak Chaikin money flow. So let's blow up the chart. And I've highlighted in blue the last 4 quarters when Pandora reported disappointing earnings. Every time the stock gapped down. Now look at what's going on at the bottom here. Bearish power gauge rating, meaning the fundamentals are not good, underperforming the market. So the market is agreeing with the model. Remember that phrase. Key takeaway from this webinar. No matter how good you're, if the market doesn't agree with you, you're fighting headwinds. At best, it's dead money. At worst, it's a disaster in the making. And so Pandora is your classic bear. And guess what? They reported earnings today after the close, disappointed again, and the stock is down 3 or 4% in aftermarket trading. Another bad quarter, 5 in a row. These patterns repeat over and over and over again. Stocks with bearish power gauge ratings report negative earnings surprises at a much higher rate than you'd expect based on probability. Stocks with bullish power gauge ratings report positive earnings surprises like Skyworks, and we'll see a number of examples at the end, because one of the ways that you can make volatility work for you is during earnings season, but only if you have a GPS like the Chaikin power gauge rating. Now, this combination of the power gauge rating, which is our quantitative model and is fundamental in nature, and Chaikin relative strength, which is pure technical, is so powerful that we call it the dynamic duo. The key takeaway from this slide should be that relative strength stands alone as a bullish or a bearish indicator, even if the power gauge is neutral. If a stock is outperforming the market, that's bullish, and we have two entry signals that key off that. We call it our relative strength buy signals or sell signals. And relative strength is really the first technical indicator that I researched back in 1968-69. I then added money flow because I wanted to look under the hood to see how much gas was left in the tank. Because even if all you're doing is technicals, you can have a car that's driving 140 miles an hour. Unless you know how much gas is left in the tank, you have no idea how far it's going to go. It could stop in a minute, it could stop in an hour. So I always wanted something to look under the hood into the gas tank, if you will. That's what Chaikin money flow does. Relative strength tells you whether the car is leading the pack. Bottom line, superior returns come from stocks that are outperforming the market. When you combine that with the power gauge rating, which has proven predictive value, the NASDAQ index has proven it, and all these examples we're going to look at in just a minute, which are real-life examples that I've either written about, blogged, or tweeted. There's a public record on these. They're not cherry-picked. They prove that the combination of relative strength and money flow, and the power gauge rating really work, and then money flow adds to that. So let's look at an example of that dynamic duo. Here's Dr. Pepper. A lot of the examples we're going to look at are aggressive stocks. Power gauge rating is wonderful with consumer beverage stock, normally considered defensive group. It's a place where typically people go when they're uncertain about the market. You wouldn't expect to make 55% on your money in a beverage stock, even in a bull market. But the power gauge rating was bullish. Dr. Pepper was outperforming the market, so the market was agreeing with the model. That's your concept of the dynamic duo. And then you look for the buy signals. So in this case, we have our relative strength buy. Now, we have these 6 pairs of buy and sell signals up on our website, even if you don't subscribe. Hope you will. We're pretty transparent about what triggers it. So what triggers a relative strength buy signal? It doesn't care about the power gauge rating. It only cares about the stock and whether it's outperforming or underperforming the market. So to get a relative strength buy signal, you need a stock that's outperforming the market, that goes under its 21-day exponential average and then rises back above that average. That triggers the entry signal. It tells you that the selling is probably over. Signals work about 2/3 of the time. And as Steve will tell you, that's pretty good percentages when you've got the ability to make a swing trade for 4 to 8 weeks. And in a volatile stock, that can be a 30% move. Even in a Dr. Pepper, that's a 15% move. Now, at the same time you are buying Dr. Pepper, using this dynamic duo concept, you are avoiding Coca-Cola. Now, why is that important? Well, it's important because you don't want to put your money either in trades or in your 401k plan into dead stocks. Coca-Cola has been a dead stock. They're threatening to come up with a new corporate business plan. Can't get their act together. It's pretty amazing, this storied company. Market agrees with the model. Underperforming, bearish power gauge rating. If you want a beverage stock, which do you want to be in? Coca-Cola, which is going sideways for the past 12 months, or Dr. Pepper that's up almost 60%? To me, the choice is simple. And there are choices every day in the market. And we're going to see examples of that in terms of the earnings that came out tonight after the close and other examples. You don't have to buy any given stock. You don't have to buy Coca-Cola. Warren Buffett likes to say they don't call balls and strikes in the stock market. And what he means by that is you don't have to swing at every pitch. Wait for your pitch. He's a big fan of Ted Williams, arguably the best hitter in baseball unless you're from Cincinnati and think it's Pete Rose. Ted Williams had the smallest strike zone of any hitter in history, and he's also the last batter to bat 400. And the reason Warren Buffett likes it, Ted Williams is sort of his idol, is he's looking for that sweet spot, the fat pitch, where there's a high probability that you're going to connect with a ball, and that's how you bat 400. So very important to have the setup be there and use the entry signals. The candlestick signals are fabulous. The hanging man and the spinning top and the dojis are fabulous when you combine them with these two indicators and the money flow. Now, we've taken this concept one step further, this relative strength concept. I'm going to pose a very controversial proposition. The key to turbocharging your profits and keeping them is spotting personality changes. Now, what do we mean by a personality change? It's a stock that's been outperforming the market, so the relative strength indicator is green, that becomes an underperformer, or vice versa. And the worst thing you can do is to not recognize these personality changes as they're happening, because then you're putting your feet in cement. You're staying with the old mantra around the stock, and you're not adjusting to what the market's doing. You're basically telling the market what you think instead of listening to the market. So as a trader, the worst thing that can happen to you is if you're on the wrong side of that door when Jack Nicholson's coming through with the axe. So let's look at 3 examples of personality changes. One of them is a golden oldie. This is Apple in 2012 heading into 2013. This is pre-split, 700, was outperforming the market. And then you had a bearish personality change. It went from outperforming and green to underperforming or red. Now, the power gauge never turned bearish on Apple. If it had, I'd probably be retired because everybody would have thrown their money at me. The reason it didn't turn bearish, fundamentals were so strong, but that didn't stop the stock from going from 700 to under 400. And if you kept your feet in cement, didn't recognize that personality change, weren't monitoring Chaikin money flow and these relative strength sell signals, you either gave back a lot of your profits or you started bottom fishing in Apple, and that was a hard trade. Even though it kept rallying 10%, the better trade, the better opportunity was to recognize the bearish personality change, money flow staying negative even on 10% rallies in the stock, so that's the opposite of what we saw in Skyworks. That's that tell. This is $1 million tool, and you can get it for free on stockcharts.com. We don't have a monopoly on it because I put it in the public domain. But when you combine it with the power gauge rating, the relative strength, and some signals, whether they're candlestick signals or Chaikin signals, you got something powerful. Now, these red triangles are points in time when our relative strength sell signal triggered. So how did that happen? Stock, Apple in this case, underperforming the market, rallies above its 21-day average, and then drops below it. Now look how beautiful these signals were. Wouldn't you have loved to have bought a put option? Or if you were stubborn and were still in your Apple position, you followed this discipline, this methodology, step 1 in the Chaikin 5-step methodology, you get out there. You don't question it. You have conviction and confidence because you're using a methodology that keeps proving itself over and over and over again. And as Steve said Tuesday night, does this work every time? Of course not. Nothing in the stock market works every time. But anything that can work 66% of the time or more, and here it's more, 5 of these 6 relative strength sell signals were big winners, where Apple dropped 10 or 15% over a 4 to 6 to 8 week period. Those are profitable entry signals on the short side. The one that didn't work was after Apple had made a double bottom. Maybe Steve will weigh in on whether this qualifies as a fry pan. I'm not sure. And you got a relative strength sell signal, and that one didn't work. And that's why you've got to use stops. We're going to talk about money management very briefly when we talk about playing good defense. Then ultimately the power gauge rating turned bearish at around 480, and it was off to the races to the new high. Now here's a more recent example of a bearish personality change. Apache in the energy sector. We're going to focus on 2 ETFs in the middle of the presentation. One, a bullish ETF, healthcare. One, a bearish ETF, energy, which is turning, by the way. So this chart on Apache shows you this bearish personality change when the stock was trading above 90. Now, you missed the high at 105, but that's a heck of a lot better than the 55, and the Chaikin money flow was negative in this whole phase of the decline. Finally, the power gauge rating turned bearish in late October. The stock was around 75, still a great spot to go short or sell it because it's heading to 55, and now you got a long basing period. Now, here's a more recent example. This is a bullish personality change in Cirrus Logic, another company that supplies chips, in this case sound chips, for the Apple mobile devices. Excuse me a second. Now, Cirrus had been bullish. We got some buy signals. Then it started underperforming the market. You see the institutions selling negative Chaikin money flow. A relative strength sell signal at about 22 on the way to 1770. And then the institutions changed on a dime. They turned bullish on Cirrus. There was a positive earnings report. The stock spiked up to 22. Bullish personality change. You got to recognize these. This is how you find powerful moves based on fundamentals, the power gauge, and the relative strength with the money flow supporting it. And this stock was almost unbuyable. Steve might have a good way to have bought it using the candle patterns. Here it looks like it traded down to the T line, held, and then rallied. That might have, when it exceeded that peak, that might have been an entry. I'm going to leave all that to Steve because he's the expert on that, but I've learned enough listening to his webinars to know that that pattern may have triggered also when you broke through this double top here at the 24 level on the way to 34. And this is all in 2015, long after the iPhone 6 came out. So that's a bullish personality change. You've got to recognize these. If you can recognize these just by monitoring a relative strength indicator, you're going to be on the right side of big moves. Now, our second step after a disciplined methodology was to play offense well, which means knowing what to buy. So 3 examples of that. NXPI Semiconductor, also part of what I call the Apple ecosystem. They provide chips just like Skyworks and Cirrus. They're called near-field communications chips. They enable Apple's mobile payment system. They're also now being embedded in American Express credit cards and other credit cards. It's a way to have secure transactions on a mobile device. And you got that combination of bullish Chaikin power gauge rating, meaning the fundamental factors, those 20 factors, are positive. Stock was outperforming the market for this whole period except during the crash around the Ebola panic. And then you get these 2 beautiful relative strength buy signals when the bullish personality change happens again here. And these are just gorgeous entry signals, and they happen over and over again. We got one just recently in the stock, which was down earlier. I think it finished stronger than that. But this is an example of playing good offense, finding stocks like NXP Semiconductor. Now, they announced an acquisition of Freescale Electronics, which makes semiconductors for automobiles. And this shows you how powerful the stock is. Usually the acquiring company's stock goes down and the company that's being acquired goes up. In this case, the market liked that acquisition so much the stock gapped up, went sideways, went right to that T line, and then spiked up to make a new high. Now it looks a little more like Skyworks, although they didn't put it into the S&P 500. Second example, AmSurg, American Surgical, mobile surgical clinics. Powerful stock. Very mundane business, believe it or not. Bullish power gauge rating since late May. Outperforming, starts to underperform slightly in here, but look at the Chaikin money flow. Never turned red. You got I call that about a 6-week pullback from 53 all the way to 48.5, and the money flow stayed positive. Relative strength did go negative, but guess what? Power gauge turned bullish, followed by a bullish personality change here at 54 on the way to 66. That's a pretty nice move, given that we're in 2015 where the market can barely make progress to the upside, and you had a wonderful oversold buy signal. 8-day low on a stock with a bullish power gauge rating. I made this my bullish stock of the week. It really made sense to me. They have the ability to buy clinics. I just bought one in Florida after I recommended it. That's what spiked the stock up. They can roll up these surgical clinics and create scale in an industry that's very fragmented. So again, the story makes sense to me. I like a story that passes the smell test. And earnings are starting to improve because of an acquisition that's making them much more aggressive. But the tip-off is the Chaikin money flow. Again, never goes red even when it goes sideways. For 4 or 6 weeks, it's telling you the institutions are not contributing to the selling pressure. And finally, AutoNation, which I recommended as my bullish stock of the week this week on Sunday. 3.5% of all the retail auto sales. They have 190 dealerships. Powerful management started by Wayne Huizenga, who started Waste Management, brought in someone who really turned the company in 1999, still there as the CEO. But that's all sort of a sideshow. What we care about is that the power gauge rating is bullish and it's outperforming the market, so the market is agreeing with the model. Now, in this case, you had some selling. Clearly, people think that back here in December, the stock is a sale. Then they report better than expected earnings, and they do it again just the other day. That's why it spiked up above 66, up to 67, because they reported better than expected earnings. Barron's had a very positive story on them on Monday, and then the earnings came out, and they were better than expected. This is a powerful story of a company that's rolled up dealerships where the independents are going out of business. Again, it makes sense. Now let's look at playing good defense, because good defense protects your capital. And to me, good defense means 3 things. A, it means good money management. Key to keeping your profits and avoiding headaches. You can't lose too much money on any one trade, and you can't put too much money into any one trade. You've got to diversify. We often overlook that, but you don't want to lose too much on any one trade. Second way to play good defense is if the power gauge rating turns bearish on a stock, you just get out of it. If it's in your 401k plan, there are better stocks to buy. There's a fat pitch out there waiting for you. So sell the stocks with power gauge ratings that turn bearish. Don't bottom fish. And if you're looking for opportunities on the short side, you can turn landmines into gold mines by shorting these stocks. So here's an example of a classic stock to play defense in. 3D systems, 3D printers. Stratasys could have been used here. They were the darling in 2012 and 13, and then Barron's wrote a very negative story in January of 14 that basically blew the cover off this whole 3D printing story. The emperor really had no clothes, and look what happened. Power gauge rating had already been bearish. The stock had moved up from 40 to 68. So that shows you that power gauge rating being bearish doesn't mean that a stock can't rally. What it does mean is if you own that stock, you're on a high wire without a safety net. The discipline of getting out of those stocks does 2 things for you. It takes away the anxiety of owning stocks down to 28 and wondering what to do about it. So you're going to lose sleep, and losing sleep is probably the biggest no-no for a trader. You've got to be fresh every day, and I promise you that if you're long stocks like Triple D in your trading account, you're not sleeping well at night. Now, how do you turn that around to your advantage and let the volatility work for you? Well, you turn landmines into gold mines by looking for opportunities to buy put options on rallies. Why? Because the power gauge is bearish and the stock is underperforming the market, and the institutions are selling the stock every chance they can get. You had a period of 8 months, just total red on the Chaikin money flow. Every rally ran into resistance, in this case at the 21-day moving average. Never even got to the upper volatility band. It did this one time as it retraced about 38% of that first decline. Then it couldn't even get past the 21. The sellers just came in droves. You turn that to your advantage by using these overbought sell signals, 8-day highs, to buy put options or go short the stock. And you would have been doing that in the 45 to 50 area. Then they started reporting negative earnings surprises at gap down. Lumber liquidators. Did the power gauge rating know that 60 Minutes was going to do an expose showing that there was formaldehyde in the floorboards that they were manufacturing and importing from China? Absolutely not. But it didn't like the fundamental factors, and it's been bearish on lumber liquidators for well over a year, and the stock was underperforming the market long before they reported a negative earnings surprise back in July. This has nothing to do with 60 Minutes. This is just a company with bad fundamentals. At that same point in time, you could have been buying Home Depot or Lowe's in the home improvement area, same area that Lumber Liquidators is in, and those stocks have done beautifully. So here you have these overbought sell signals working over and over again. And one of the keys to getting out of stocks with a bearish power gauge rating is you don't get sucked into these rallies thinking that the bottom is there. Even if the stock's outperforming the market, even though I said relative strength stands alone, you can just sort of sense that this is a stock you don't want to be bottom fishing in. And then sure enough, the 60 Minutes expose, stock gaps down, and then you have 2 more days to sell it. Bearish personality change. This is the 60-minute expose. This is what happens after it actually airs. Wall Street's ever hopeful. You would have thought the stock would have collapsed. It didn't. You had a couple of days to get out at above 45 on the way to 28. And then finally, a very recent example, SanDisk. DRAM chips, 2 negative personality changes. Power gauge rating turned bullish very briefly, but then it reverted back to neutral and a bearish personality change. The power gauge rating turns bearish in January. You really want to be out of the stock at that point. It's trading at 2 sell signals. One of them came 2 days ahead of a very bearish earnings report. The stock dropped from 80 all the way down to 65. And imagine the profits you could have made on a put trade there with negative Chaikin money flow, underperforming the market, and a bearish power gauge rating and a signal. 3 indicators lining up and the signal. That's like gold. Are they going to work every time? Nope. But your batting average is going to be better than Ted Williams. So we have 6 pairs of buy and sell signals. Let's focus on the relative strength signal. We've seen examples of 2 of them. We'll see examples of 2 more. Edwards Lifesciences. It's in the very strong healthcare sector. We're going to look at those sectors in a minute. In the medical products industry group, been a great stock. Bullish power gauge rating, outperforming the market. Another one was triggered about a week and a half ago. The company reported earnings after the close today better than expected. So this is why you follow the signals, because they're disciplined based on proven analytics, combination of the power gauge rating or relative strength and a technical pattern. It's better than trading on your emotions. And I know Steve stresses over and over again that the candle patterns take the emotions out of the decision making, and he's absolutely right. So on the downside, here's Stratasys in that 3D printing group. Bearish power gauge rating, negative personality change. How do you make money? Follow the signals. In this case, this is our money flow sell signal. Triggered at about 100 on the way to 70 over an 8-week period. Great signal for a swing trade. Another signal triggered here at 60 on the way down to 51. Negative technicals, bearish power gauge rating. You'll look at those signals and you say, wow, the disciplined approach really does work. So now here's a recent example also in the medical products area, just like Edwards Lifesciences. A much smaller company, Natus Medical. They make a fetal monitor. They do have almost $400 million in revenue. It's a small cap stock, but look at the pattern. Bullish look at the accumulation from the Chaikin money flow, and then you get a bullish personality change when the relative strength goes from underperforming to outperforming, and then it's your job just to find an entry point. Well, you got a buy signal, an oversold buy 2 days ago. Price was about $38.50. How do I know this? My wife bought it. My wife, Sandy, who's giving a webinar on Monday, by the way, at 1 o'clock in the afternoon Eastern Time on the 5 biggest mistakes investors make, was a novice investor 2 years ago. By following these simple disciplines that we're looking at, power gauge rating, relative strength, and money flow, and the signals, she's turned into a world beater. She had the 2 biggest stocks of 2014 large cap, Southwest Air and Skyworks. She bought this stock based on the fact that it was on our watch list because it was in a strong industry group, paid about $38.50, and has a 10% profit in 2 days. She's also in Edwards Life Sciences, which reported better than expected earnings after the close and is trading higher in aftermarket. It's a discipline. You don't have to overthink it. We often overthink the market as traders and investors. It really is KISS. Keep it simple. I'm not going to say stupid because nobody on this webinar is stupid because you're trying to improve your knowledge. Smart. You're on the way to becoming the smart money. So that's why you follow the signals. When we launched this product in January of 2013, a little more than 2 years ago, people said the signals are great, but how do I find them? So we created an alerts dashboard. This is from our iPad app. We also have a desktop app. And this is the alerts dashboard from my stocks list, which is about 150 stocks that I follow because I do webinars and blog. It's too many for a trader to follow. You should follow 20 or 30 and get to know them well. But I've highlighted a couple of names here. There's, interestingly, Skechers was an oversold buy back on March 10th at 66. We're going to see a chart of that in a little while. I circled Humana because it was in the healthcare. It could have been Anthem. You had a money flow buy at 162, and then on the sell column, Zillow triggered a momentum breakdown at 112.50. Yelp, which has been a very weak stock, had a money flow sell. There's Coca-Cola. So it zeroes in on actionable opportunities, and let's look at how those two, Humana and Zillow, worked out. So here's that money flow buy on Humana. You got a pullback with very positive money flow to an oversold with a bullish power gauge rating. That's what triggered the signal. The stock went from 158, 160, all the way to 180 in just about a week. And on the opposite side was Zillow at 112, heading down to 80. And you can see it's visual. Bullish power gauge rating, bullish relative strength, bullish money flow. It's green, 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 and a buy signal. Here it's red, 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 and a sell signal. And here's another stock. We're going to end by talking about how you can use volatility during earnings season. Zillow reported very disappointing numbers. The stock gapped down, traded all the way down to 80 last week. It's rallied back up. Do I want to bottom fish in Zillow? Absolutely not. We just got an overbought sell signal coming into this morning's action, and on a fairly good up day, Zillow was down 1.7% midday when I pulled this chart. And by the way, at the end of the session, we're going to take questions. We're going to go to our desktop mode, real time, so you'll be able to see charts on any of the stocks you're interested in. And Joe Bacella from Chaikin is going to curate the questions. He may be answering some of your questions already. The point is, bearish power gauge rating, underperforming the market. Negative Chaikin money flow, you get a sell signal, just sell it. Sell it up here at 112. That's that momentum breakdown. Now you got an overbought sell. Now let's look at ETFs. I know a lot of you trade ETFs on the market, the triple Qs, the IWMs, and the spiders. Not going to get into that. We're all about GPS for stocks, although we do have a powerful relative strength indicator for the triple Qs, the IWMs, and the S&Ps. Here we're going to show you how to zero in on industry group, ETF sector, and industry group strength and weakness. Strong groups give you a tailwind. That equates to bigger profits on the long side. Zacks, Investors Business Daily, Standard & Poor's, they've all written white papers documenting that if you buy strong stocks and strong industry groups, your profits multiply. Now, they measure strength and weakness based on price momentum. We do something very different, as you'll see in a minute. But weak groups are a headwind. If you're investing on the long side in weak industry groups and sectors, you're bucking the trend. They're more likely to be profitable as short sales. So, how does Chaikin help you sift through all these ETFs that are out there? Well, we have a wonderful navigation bar with user lists, industry groups, indices, Chaikin hot lists, but now we're going to look at ETFs. So there's an ETF slice there, and if you press that, we start out by analyzing the 9 sectors in the S&P 500 and then the 20 industry group subsectors. And then, as you'll see, we categorize something nobody else is doing based on their industry group, style, value, or growth, market cap, and keep your eye on health. First thing we're going to do is tap on spider sector. And we bring up the spider sectors ranked not by price momentum, but by the number of stocks in that ETF with bullish versus bearish power gauge ratings. So right at the top of the heap has been healthcare. XLV, very liquid ETF. You wanted broad participation in large cap healthcare stocks, a perfect place to be. 22 bullish versus 4 bearish. So first thing we do is tap on that and we look at the chart of the XLV. First thing we see is that there was a bullish personality change. So you can get them in ETFs as well as individual stocks. Came in late July of 14. Just at the point in time that energy was rolling over, healthcare was starting to outperform. And there was big Chaikin money flow coming into this ETF. And basically, the chart confirms what the power gauge ratings, we call that our power bar, bullish versus bearish. The chart confirms that the healthcare sector is the place to be. Now, here's a really slick way to find the best stocks. I went down to health, which is basically all of the health ETFs. I tapped on it. They came up ranked by power gauge rating. Right at the top was PPH, the Market Vectors Pharmaceutical. 12 bullish stocks, 1 bearish. Could have looked at the Guggenheim S&P equal weighted with 21 bullish and 2 bearish. So here's a little trick. So easy. Takes you less than 2 minutes. You tap on PPH and you look at the chart. It confirms that, indeed, PPH is even stronger than the sector itself, and you had this bullish personality change in September. And you had a series of relative strength buy signals. Now, if the ETF is performing well, I want to know what stocks are in that ETF. So I tap on it, and the stocks, all the 25 stocks in the PPH Market Vectors Pharmaceutical ETF come up ranked by Chaikin power gauge rating. The one bearish one is GlaxoSmithKline. As of yesterday, that wasn't bearish, so that just turned bearish. But here are the bullish names. Now, if this is these are the names I want to look at as long candidates. I could trade the ETF, but I can improve my profits, my percentage gains, by looking at the strongest stocks in this ETF where clearly they're smart stock pickers. So AmerisourceBergen, we're going to look at that. Mylan, we're going to end the webinar with. Valiant, a lot of strong names here. They clearly are zeroed in. Teva, which is trying to buy Mylan. So let's look at a couple of these charts. AmerisourceBergen. Power gauge rating bullish off and on for almost a year. A bullish personality change when it went from underperforming to outperforming. Now the market since late October has been agreeing with the model. The stock went from 85 to 115, and we've got these 2 wonderful money flow buy signals to get you into the stock. And you can see the accumulation going on. It's a generic drug maker. There's consolidation going on all in the generic drug area. They're trying to buy one another right and left. Then we look at Valiant, also a takeover target. Einhorn, hedge fund manager, another pharmaceutical stock trying to buy Valiant. Power gauge rating had been bearish, and the overbought sell signals actually were working until Einhorn and his drug company partner accumulated big positions in the stock. So the power gauge turns bullish. One of the reasons is insider buying. Another reason is analysts are raising their estimates. You get a bullish personality chain. Then you get this wonderful oversold buy signal. It became very hard to buy at this point because they got aggressive in bidding the stock up. Final resting place is at around 210. Company's going to be bought out. And it's in that PPH. So you would have seen that in PPH all along the way. They've owned the stock for quite a while. And then finally, if you had been looking at this PPH in October, you would have found Care Fusion, which was in their portfolio. Bullish personality change, positive power gauge rating, a buy signal, and you get a little bit lucky. Becton Dickinson makes a bid for the company. It's trading. The bid comes in at around 58. This chart ends in October. It's still trading up there because that's what it's worth. Sometimes you get lucky. Thomas Jefferson has a wonderful quote. He says, "The better prepared you are, the luckier you get." And using the Chaikin power gauge rating and the relative strength, the money flow, and these candlestick signals, you are well prepared, and occasionally you get lucky. Now, let's look at what has been the weakest sector up until just recently, energy. Anybody who's long energy knows the pain and suffering that people have experienced in their energy positions. So first thing we do is look at the ETF, XLE. I see the bearish personality turn bullish in late July, just before energy was turning bearish. We got a relative strength breakdown signal in early September. And there was a lot of pain and suffering in the XLE, the large cap energy stocks, and the small cap. But it looks like there's a turnaround in the making. The relative strength is still not green, but clearly from a price basis, you had a double bottom. You retested it without making a lower low. You've broken out above the upper volatility band. So things are changing in energy. Whether that's lasting or not remains to be seen. Price of crude oil has rallied about 30-40%. Now the rubber meets the road. We see where energy is really going. But once you see that sell signal and the bearish personality change, your job as a trader or an investor is to evaluate any energy stock that you're long and get it out of your portfolio if it's got a bearish power gauge rating. So here's an example of that, Range Resources. Long before the energy sector turned bearish in late August, Range Resources had a bearish power gauge rating and a negative personality change. You've got to recognize those when they happen. When the market agrees with the model on the downside and you get a sell signal, you get price acceleration to the downside. Another example, Transocean. Bearish power gauge rating for well over a year, off and on, neutral but mostly bearish, underperforming the market as far back as February of 2014. It broke support. Look at this consolidation phase. That's about 3 weeks trying to make a bottom. Look what's happening with Chaikin money flow. Never turns positive. That's the reverse of what we were looking at. That's your tell that this stock is going lower. The institutions are selling it, in this case not on strength, but just on that sideways action. So underperforming the market. Power gauge has been bearish. In early October, it turns bearish and stays bearish. The stock is still $30 on its way to 14. So it's never too late to sell a stock with bearish credentials in the Chaikin methodology. And that means bearish power gauge rating, underperforming the market, negative Chaikin money flow. And then you use the sell signals or candlestick pattern to get short the stock or buy a put option. And then finally, if you were looking for upside in the energy sector, there was one stock all through 14 that had a bullish power gauge rating. That was Tesoro. So from April 14, bullish power gauge rating, positive personality change, while energy was going from hell in to hell in a handbasket, Tesoro was going from 60 up to 95. And basically has stayed bullish pretty much the whole way. You had some selling in here, and then you triggered a relative strength buy signal when the power gauge turned bullish and the stock broke out above its 21-day average. Now, other stocks have joined in. Valero had a positive bullish personality change back in January, ahead of that bottom in energy. There's a pattern here. These are refiners. So the refiners are turning around. They're taking advantage of cheap crude oil, and they're turning it into profits. So bullish power gauge rating in mid-January, a bullish personality change. This is why it's so important to identify these. You go from underperforming to outperforming. Here's a stock that's gone from 52 to 64. You've had a couple of good buy signals, entry points. Sure, you could have found some candlestick entry points. So if energy is turning around, where do I want to go? I want to go to the stocks in energy with bullish power gauge ratings. You tap on the ETF, you find them. Now let's end the webinar with how you can turn volatility to your advantage during earnings season. So winning plays long and short during earnings season. Here's one of our classics. 2 years ago, it was Priceline, dropped 100 points. The puts went up 42 times in one day. I was on CNBC talking. More recently, Netflix back in October triggered a sell signal ahead of earnings. Power gauge was bearish. It was under its long-term average. I felt up near this triple top, this was an interesting short sale, so I made it my bearish stock of the week. People who bought out of the money puts made 50 times in a day, but they were probably risking everything that they put up because they were short-term weekly puts. But we did get this testimonial. Outsized put win again. Quick $21,500 profit. Just added Chaikin Analytics to my arsenal. This was a new subscriber. Using the upcoming earnings ideas in Chaikin, Netflix had a bearish rating, was recommended as a short put contracts on 10/15 at 22.20, and sold them a couple of days later at 93.90, a quick $21,500 profit. Now let's look at stocks that have reported earnings this week to see how you could have taken advantage of volatility ahead of earnings reports. So Skechers reported earnings after the close last night. Very bullish earnings. Power gauge has been bullish for over a year. It's a footwear company. Basically been outperforming the market except for this period between November and February, and then it started personality change. A lot of money flow, buy signal here after the bullish personality change. Even though it was up near the upper volatility band last night at the close around 75, this stock was up almost 14% today because the earnings just blew through Wall Street estimates. So if you had bought this stock on this pullback under the 21-day average, thinking that the combination of bullish relative strength and a bullish power gauge rating, that dynamic duo, indicated a likelihood of a positive earnings surprise, you would have been rewarded. And you would have been rewarded big time because the stock was up 14% today. Now here's the flip side of that. Chipotle, under its moving average, bearish power gauge rating, underperforming the market, reports negative earnings surprise, drops 50 points yesterday and an additional 4 points today. Might have turned around by the close on short covering. You avoided a 50-point loss by following the discipline of the power gauge, the relative strength, and the money flow. And if you were lucky enough to buy a put option, you made out big time. And we've had bearish calls on Chipotle as far back as 2 years ago, 2.5 years ago, where it dropped 100 points on a negative earnings surprise, and the put options went up 15 to 20 times. And then finally, a stock that reported after the close tonight, Starbucks. Now, Starbucks is interesting. It had a bearish rating through this whole bottoming phase. Rating turned bullish for about 5 weeks in late October through early December. It's still underperforming the market, but then you had that bullish personality change. Power gauge went neutral based on valuations, but the relative strength stayed strong. Remember I said on that dynamic duo slide, relative strength stands alone as a bullish or bearish indicator. When you see money flow like this in a strong stock and you get a buy signal, that's that relative strength buy signal, it's okay to go long even though the power gauge is neutral. Now, what happened tonight? First of all, it was up 2.25%, anticipating a good earnings report. And they reported better than expected earnings. The stock was trading another 4% higher in the aftermarket. So Starbucks, even though neutral power gauge rating, has been outperforming the market. You look for those signals ahead of earnings. There's another benefit to focusing on this discipline. You avoid stocks like Green Mountain Coffee, where you have a bearish power gauge rating and you had a bearish personality change back in November when the stock was trading at 135 on the way to 110. So I talked about choices. You don't have to buy a stock in any given industry group. So if you like coffee, you think it's a growth industry and fast food, and you'd be right, you buy Starbucks and you avoid Green Mountain. If you like to go short, you can be long Starbucks and short Green Mountain. You can do that at options. It's called pairs trading. Bottom line is, follow the defensive discipline of avoiding stocks like Green Mountain. Get out of them when they turn bearish. Look for opportunities to go short. Look for a candle pattern to trigger after a rally. It's a beautiful way to avoid pain and suffering, sleep better, and eliminate the anxiety of bucking the trend. And then finally, a stock that's going to report earnings before the opening tomorrow is a very strong biotech group, Biogen IDEC, one of the leaders along with Amgen, Gilead, and Celgene. Power gauge rating has been bullish off and on for a year. It's stayed bullish since late November. It's outperforming the market. The likelihood is that Biogen will report better than expected earnings and spike to the upside tomorrow. Is it a given? Is it a guarantee? No. But if you wanted to take an options trade into those earnings reports, you want to be on the long side. Even though the Chaikin money flow tells you that people are taking profits, stocks with bullish power gauge ratings that are outperforming the market are twice as likely to report a positive earnings surprise as stocks without a bullish power gauge rating. So here's a test of the system. Is it going to work 100% of the time? No, but the likelihood is Biogen's going to report better than expected earnings and spike to the upside. So the platform is called Chaikin Analytics for both desktop and iPad. I think you can tell from my passion that I really believe in this product that I've created. I came out of retirement to create it. It's the culmination of 45 years on Wall Street. We created it for individual investors, but some of our old institutional customers are now using the product. People like the Paulson Hedge Fund, Soros, Fidelity's technical research department. But our sweet spot are individual traders and investors like yourself, the people who come to Candlestick Forum. We really believe that the individual investor can level the playing field, can become confident, can be the smart money. So we'd like to make it as easy as possible for you to subscribe to the Chaikin Analytics platform. Normally costs $1,950 for an annual subscription. Webinar special for the Candlestick community, $1,650, taking $300 off. You can take advantage of that by going to chaikinanalytics.com/candle. Type in the offer code CANDLE, all in caps. The offer expires in 72 hours, Sunday midnight, April 26th. Or you can contact sales@chaikinanalytics.com, and the number's on the screen, 877-MY-PORTFOLIO. Now, what do you get for $1,650? Well, you get to turbocharge your profits, and you get an immediate $795 in added value. We've taken $300 off the subscription price, and bundled with Chaikin Analytics comes our Power Suite, which costs $495 a year. Research reports, a portfolio health check, and very top of mind and very important Chaikin Market Insights weekly market letter comes in your inbox on Sunday, represents my 45 years of collective knowledge about the markets as a bullish or bearish stock of the week, and very valuable as an insight into the way I use the system. We also do free small group tutorials, anywhere from 2 to 4 people, where Joe Bicella, who's on the webinar, and our other support people will get you up to speed so you know what's in the system, the features, how to use them, zeroes in with the intent of helping you get started as quickly as possible. We also have free subscriber open forums. You can dial in twice a month, ask questions, hear what other people are saying, and asking about Chaikin Analytics. And then finally, John Schlitz, who's an old associate of mine, a great market technician, writes our daily morning insights, comes out at about 8:45 every day, analyzing what's happened yesterday, what's likely to happen today, pre-market activity, and then a bullish or bearish stock of the day. Now, Chaikin Market Insights to me is invaluable. It represents my collective knowledge, 45 years on Wall Street. So here's an example of our bullish or bearish stock of the week. March 29th, our bullish stock of the week was Mylan at 61.63. We said buy Mylan on the current dip as it sold off from a high of 65.63 to $60 on Thursday. We wrote this on Saturday. Here's what the chart looked like. That's where the buy signal came in. Now, why did I do this? Bullish power gauge rating, positive personality change, kept outperforming the market, but it was that Chaikin money flow in a stock that had broken out to new highs ahead of the market and then pulled back. Now, an interesting thing happened in Mylan. They had just bought some European properties from Abbott Labs. And Abbott announced on Monday morning before the opening of a third of the shares that they got in that exchange. The stock opened not at 61.63 but at 59. So you had an opportunity to buy in at 59. Then it turned around and triggered a relative strength buy signal. Mylan had made a bid for another $30 billion bid for another generic drug maker, and now suddenly Teva has come into the picture making a bid for Mylan. And guess what? Teva was in that PPH portfolio. So those guys are great stock pickers. And we got this testimonial. You pick winners. Oh, my God. As you suggested, bought some Mylan 2 days ago, added to my position with the relative strength signal first thing this morning. Already up 15%. I'm a true believer. This is the power of this simple discipline of the power gauge rating, relative strength, money flow, and the signals. It's only 3 things to watch, and whatever signals you're comfortable with, whether they're candlestick signals or Chaikin signals or some combination or your own technical signals, it really works. Mylan's going to get taken over. No doubt about it. Or they're going to take over a big whale like Perrigo, which they're trying to buy. One way or another, there's consolidation going on in the generic drug business. We saw ABC. We see it at Mylan. This is a place to be. It's healthcare. It's the right sector. You got the tailwinds. This is how you make big money in the stock market. So I encourage you to consider subscribing now to Chaikin Analytics. Pay only $1,650. ChaikinAnalytics.com/candle. Offer code is CANDLE, all in caps. So with that, I'd like to thank both Steve Bigelow and his team for giving me the opportunity to share this knowledge with you. I hope this has been educational. It's meant to up your game, show you that there is a way to take advantage of the fundamentals without being an analyst and getting bogged down in the numbers. And with that, I'm going to go to our live desktop app and turn it over to Joe Bicella, who will answer your questions, and we'll put those stocks up into the desktop app and see if we can show you a little more about Chaikin Analytics. So, Joe, if you're on the line and you've been curating the questions, we're ready for you.
All right, before you do that, Mark. Hi, everyone. Joe, hold on for a second.
Yeah, Joe, let's give Steve a chance.
Yeah, I just want to throw my little 2 bits in here. When I first started investing, which was way back in the 70s, I thought if you could figure out how to take all the indicators and accumulate them so that you had a bunch of indicators that kind of work together to tell you that you're in the right place at the right time. I tried that for months and never could put it together. So not only has Mark put it together, but he's now put it into a have to worry about all those indicators, the favorable indicators being accumulated. They're already in his in the program. So this is one more case of you're basically putting the probabilities in your favor by using as many indicators in one package as you can. And then this is why I like working with Mark. If you've got all the indicators working in the right direction and you can throw candlesticks on top of it, you've got an extremely powerful combination of definitely being in the right positions at the right time. So I get excited when I see Mark's information, because this is stuff I would have loved to figure out how to do years ago, and he's already done it and become very successful with it. So with that, Joe, I'll let you take over, but I just wanted to let everybody know this is the right combination of being in the right place at the right time.
All right.
Steve, thank you very
Excellent.
much for that shout out. And Joe, we'll turn it back to you.
Well, thank you very much, gentlemen. I hope everyone can hear me right now. Now, Mark, I know you like to start out with a few stock analysis. We have a few requests coming through. So one of the first ones I saw come through was MCD, McDonald's. I think there was a question about whether this stock is ready to roll over and be done with.
Well, the power gauge is not like McDonald's for a long, long time. You can see that here. It turned bearish in July. The price about 98. Been underperforming the market till just recently. It's the worst managed fast food chain on the planet right now, and they keep threatening to come up with a better model, just like Pandora and some of these other companies that are hurting. Money flow is negative. They reported earnings yesterday. The stock spiked up. God knows why. I think it spiked up because they said they had another plan. You know, that's like death on wheels. This is just not the place to be. If you want to be in fast food, there are plenty of good places to be. Certainly it's not Chipotle, but my answer is no. I don't think this stock is turning around. And the bottom line is I'd love to find something that has a bullish rating. So here's how I do that. Click on Food, Drug, Retail, Wholesale. That's the industry group that McDonald's is in. No, we're not getting there. But there are stocks in the fast food business. Starbucks is arguably a fast food stock that are performing very, very well. And those are the ones you want to be in. I know recently it was Jack in the Box for a bit, which is both Mexican food and hamburgers, but see if we're live here. Seem to have frozen. Chris, you want to take a look on our end and see if we're live?
Hey, Mark, it sounds like I can hear you pretty well. I see your screen moving around pretty well. If anyone
yeah, but
in
the
office,
charts aren't changing.
Gotcha. Okay.
Charts aren't changing here. So, I wonder if the browser is frozen.
That's the power of Chaikin.
Yeah, we're going to do a little refresh here and see if that gets us going. No,
It has to be the charts. It has to be the charts because your cursor is still moving around and the sound is coming through. So something's locked up on the charts.
Yeah, it looks to be a lockup. See if can I take that down and bring it back up, or is that going to?
No, go ahead and try that.
Yeah, apologize for this. We're going to try it again and see if that works. But let's go back to McDonald's and see if we can find another fast food stock, and then we'll move on to another stock. So you can click on Food, Drug, Wholesale, Retail. This comes up sorted by Chaikin Power Gauge rating. So if you want to find the bullish stocks, they're on the top. And I'm not seeing any fast food stocks up there. There were previously. But with Chipotle weak and with McDonald's weak, Ruth Chris Steakhouse, not exactly fast food, has a bullish power gauge rating, has been outperforming the market, and Darden Restaurants was which is a big turnaround, and you can see that turnaround in here, by the way. Bearish power gauge rating starts outperforming the market, and then the power gauge rating turned bullish here at 56 on the way to 70, and let's see if there were any oversold buy signals. This is how easy it is to spot the signal. The first one came right in here just recently, and we might have a relative strength buy signal. That came right at the beginning of the move. So let's move on to another stock, Joe.
So another stock we have is a BIIB. B as in boy, I as in igloo, I as in igloo, B as in boy.
Well, that's Biogen, and they're reporting before the opening. So that's how we ended. The expectation is, based on the power gauge rating being bullish and the stock continuing to outperform the market, that earnings report tomorrow is going to be a positive one.
Now, another stock that we looked at earlier, but there was a question also for Skechers, SKX. Someone had pointed out that while there were some bullish indicators, the money flow was not positive. Can you tell us how to balance a power gauge rating along with relative strength, and tell us what to do if a money flow does positively as we'd like to see it?
Well, as I said in the beginning of the webinar, the primary indicators that we have that give us a direct rating and the relative strength. Money flow typically will fluctuate from green to red and back again. So this is more normal. In the beginning of this move, money flow stayed green, above zero or positive through that big move. This is the Ebola panic, and the stock had a hard time recovering from that. There were some skeptics out there. This is a footwear company, manufacturer, and retailer. You can find out what the company does by clicking the information button. So they have their own stores. They also sell to all the department stores and chains, including Foot Locker. And my bottom line is I would love money flow to line up. I'm not going to get out of a stock just because money flow is negative as long as the power gauge is still bullish and the stock's outperforming the market. I may take some profits at the upper volatility band, but I'm not going to get out of the stock. Earnings, a lot of institutions will sell ahead of earnings. A lot of investors and traders who are individuals will do the same thing. They're nervous about volatility ahead of earnings reports. That's why you need a GPS like the Chaikin power gauge rating to point you in the right direction. Now, again, does it work every time? Absolutely not. But when you get a gain which ended up being 14.5% by buying ahead of those earnings, particularly on a dip like you had about a week ago, even though the money flow is negative, it doesn't have to be green. That's just everything lining up. That's Warren Buffett's fat pitch. But this is more normal, and don't let that little bit of negative money flow dissuade you. That's a move of about 8 days down in Skechers. It's about 7%, which is a typical move we can see since it broke out, and that's not going to dissuade me from being in that stock.
Now, we have a few questions. I think the gist that we're looking at here is that Chaikin Analytics can definitely help for managing a portfolio as you buy and hold stocks over a 1 to 6 month period. We also have questions about how can Chaikin be helpful if I'm a swing trader or if I trade options?
Well, that's a great question, and this is definitely a powerful tool for swing traders or options traders. So let's look at a couple of examples. Here's Centene care industry. You're looking for pullbacks to establish a swing trade or an options trade. Now, the relative strength signals are good for 4 to 8 weeks, so they're great swing trading signals. You typically go from that 21-day average and make multiple touches of the upper volatility band. Our oversold buy signal is a fabulous way to get into. So here is Southwest Air. It was a very, very bullish stock all through 2014. There are relative strength buy signals. Here's the oversold buy signals. And I think as an options trader, you got 3 out of 4 winning trades here. Two of them are just mammoth. Whether you're an options trader or a swing trader, this comes in the middle of Ebola, where for Southwest Air, based in Dallas, where the one case of Ebola surfaced, people assumed nobody was ever going to fly again out of Dallas. It shows you what a panic is all about. So that trade didn't work. It would have worked if we weren't in a panic. But these other trades are beautiful entries, some better than others. But boy, right here, trader and options trader, you want to get long. Now, the indicators all lined up here in early to mid-July. Bullish power gauge, outperforming the market. Chaikin money flow stayed green or positive on the pullback, and you get the oversold buy signal. It doesn't line up any better than that. And that's a beautiful entry for an options trade. It's an entry for a swing trade as well. Now, if you're trading weekly options, as some of us have started doing, you got to really be good with your timing. And the candlestick signals are probably better for weekly options when the setups are there. But these setups to me are fabulous. I ran an options department for 5 years for a major brokerage firm. If I had had these tools, we would have owned the options world back in the 80s. And they can work for you today. Here's Edwards Life Sciences. We talked about that. We saw an example of that. This is the oversold buy signal. Here, middle of the panic, didn't do as bad as some of the stocks did. Right here, big spike up before earnings. Another oversold buy signal, and they reported earnings after the close that were better than expected. So stocks should do well again tomorrow. And then you got that relative strength buy signal. So my bottom line is, if you can't make money trading options on these signals, you shouldn't be trading options. I'm not usually that aggressive, but really, it doesn't get any better than this. You put in a candlestick signal in there that I'm sure triggered, and you've got the best of all worlds. Now, I want to show you one other thing. I mentioned a big list of stocks. It's about 160 now. I call it My Stocks. We encourage everybody to have a My Stocks list, actually up to 175 now. Is there anybody on this webinar who thinks that you can analyze 175 stocks effectively, whether you're a computer or an institution? I'm guessing the answer is no, but we have something that enables you to do it. We call it Portfolio Health Check. You click on it, and you've instantly 175 stock list, 181 now. I keep adding to it. It's a 3-page report, comes up instantaneously, focuses on the bearish names, Adobe, Airgas, Athena Health, tells you where you've had bullish or bearish power gauge changes. So I was trying to get Jack in the Box up because I thought it had turned bearish. Look at how McDonald turned bearish last week ahead of the earnings. TripAdvisor, ServiceNow, SanDisk again, Whole Foods, which is in a breakdown phase. And then you had some other stocks like Humana and Citicorp and Toll Brothers going positive. And then what I consider to be very important, tells you which today, this week. So that's how I know that Biogen's reporting before the opening. It has a bullish rating. We give you a lot of information, but here's the real key. 181 stocks on a 4-quadrant grid. This is the single best piece of stock market analytics software I've ever created. I've been doing this for 40 years. On the upper right are stocks with a bullish groups that have a preponderance of bullish power gauge ratings. So a lot of the stocks we looked at in the webinar and on the live portion, CNC, NXPI, Darden Restaurants, all in that upper right quadrant. Here on the upper left are weak stocks in strong industry groups. Triple D and Stratasys, you could shift into Cisco. SanDisk, you could shift into NXPI. These are swap opportunities. Yahoo, Yelp, Zillow, you could switch into other software-related internet stocks. At the bottom left is where we really shine. These are weak stocks in weak industry groups, and the energy stocks have been featured there for 8 months. There's your Diamond Offshore rig. Here's Norfolk and Southern in the railway group. It's been very weak. I'll show you a chart on that. And then we have swap recommendation. So Green Mountain Coffee, remember that was bearish. We're saying switch into FMX. PCP, switching to CIR. Very powerful tool. We call it Portfolio Health Check. Gives you the ability to monitor any list of stocks. So let's say you've got a smaller list. So here's our upcoming earnings. We tell you which stocks. We have a list that tells you which stocks are reporting earnings. You do the health check. Break it down by bullish and bearish stocks. Here's where you want to focus. I think that's an old list in there, but there's Darden Restaurants and other stocks that were reporting that particular week with bullish or bearish ratings. So we really help you zero in on actionable opportunities. And then there's one more thing I'd like to highlight. I put up that BABY before. I don't even know much about the company, but you don't have to. There's that chart with the relative strength buy signals. Here's the oversold buy. Let's say I don't know anything about the stock. I want to know a little more. We have research reports on that are updated nightly. This breaks the power gauge rating down into its components in plain English. So you see exactly what's driving the rating. You see a 5-year chart. Power gauge rating we see turned bullish in April of 2013 at a price of about 11, and it's stayed bullish or neutral ever since. So this isn't just a new one-day wonder. And then at the end, we've got some of the ratios that you'd normally go to Yahoo Finance for: revenue, earnings per share, earnings surprise, and then finally company description at the bottom, other stocks in the industry group that are either bullish or bearish. A lot of information, but research on demand on 5,000 U.S. equities and ADRs. Very powerful tool. Joe, do we have any other stocks that people are interested in?
Yeah, I noticed 2 more that just came through. Kroger and everyone's favorite, Apple.
Well, Kroger was a favorite of ours for all of 2014. There's a lot of profit-taking going on at Kroger. So why was it a favorite? Bullish power gauge rating, outperforming the market in that supermarket business, but doing it right. And the buy signals worked. Both the oversold buys, the relative strength buys, and I think the money flow buys. Let's see if there were money flow buys there. Yep. Stock is broken down through support. There's some selling going on. The power gauge has turned neutral. I'm going to be looking for an opportunity to take profits off the table if the stock rallies back to our long-term trend line, which is a double smooth 200-day exponential average. That's at roughly, not roughly, it's an exact 15. The stock rallied a bit today. Don't know why Kroger sold off. It's got a history of positive earnings surprises. But there's a lot of weakness in the supermarket business. Whole Foods, which was one of our favorite bearish stocks, all through 13 and 14, with tons of gap downs on negative earnings reports, turned it around, finally had a positive quarter back in late October, spiked up because expectations were very low, had a bullish personality change. But look what's happened to Whole Foods. A lot worse than Kroger, because it peaked back here, Kroger peaked over here, and it's trading down toward where it broke out. So there's something wrong with the supermarket chains, and Kroger is an example of that. Now, Apple is part of the reason that the tech group is looking toppy. Power gauge rating's been bullish on Apple a long time. We can look at a 5-year chart. Does that constitute a fry pan bottom on a weekly chart? Stephen, if you're on, I think it might. If it does, it means I'm learning your stuff, which is very impressive. I'm pleased that I'm increasing my knowledge. So power gauge rating on Apple turned bullish in late 2013 on a post-split basis. It was about 75 on the way to 130. But now it's turned neutral. And there's money coming out of the stock. It couldn't make a new high today. The markets were up near the new high. NASDAQ did make a new high. So it's part of the reason tech stocks are not doing well. My take on Apple is most of the good news is out. And the kiss of death, they added it to the Dow 30. What in the world were these guys waiting for? Here's a stock that went from $70, 68, 70 to 130, and then they add it to the Dow. That's typically the kiss of death. The stock it replaced, AT&T, normally does better than the stock that comes in. So it may just be that everybody who wants to own Apple already owns it. It's 5% of the S&P 500. It's the largest cap company in the world. There's not much more they can do unless this Apple Watch is just a home run, and it doesn't appear that it's going to be, big enough to move the stock. So Apple is toppy. Now, that's affecting technology stocks in general because Apple weights these technology indexes. And here we see it. Remember I told you we look at the spider sectors to see where the money is going and where the potential is. So we rank them by power gauge rating. So technology is ranked number 2 with 7 bearish. But when we look at the chart of the XLK, we see the same topping action there that we're seeing in Apple, and it's been underperforming the market. So even though the potential is there, in stocks like Lam Research and NVIDIA and Avago, which has been a fabulous stock with a bullish power gauge rating since mid-December at 100 on the way to 134, there's something toppy about the whole tech sector. So Apple is sort of a harbinger of that. And you've got Skyworks and NXPI that we looked at that are suggesting that the tech sector may go the way of SanDisk and KLAC rather than the way of Skyworks or NXPI. So for the first time in a long time, I'm not wildly excited about Apple. Why? Because the power gauge rating is neutral and it's not acting quite right. And some of this Apple ecosystem acolyte stocks like Skyworks are toppy as well. Again, added to the S&P 500, perhaps the kiss of death. NXPI, which long-term is a great stock, supplies Apple with chips, not making new highs. Let's see what, in fact, that was down 4% today. And let's look at Cirrus Logic, which had that wonderful bullish personality change to see if the weakness, now the weakness hasn't surfaced there. So here's the way I look at the world. If Apple is toppy and NXPI is weak and Skyworks are weak, I want to take my money off the table in Cirrus. Power gauge is neutral. Why do I want to hang around there when it may start to trade down to support in the $30 range? Still trading at 34, 36. Unless you believe there's a takeover of Cirrus coming, and there were takeover rumors, it's a great time to take some money off the table. Take your profits if you're long. I wouldn't go short the stock. But this is how I look at the world. I try and do a top-down approach. So I look at that sector. It's not performing as well as I'd like, the technology sector. I look at Apple, which is the biggest name in the sector in the group, and I see a stock that's having a hard time making new highs. And I see some of the former favorites breaking down. That's a complete picture. It's enough for me to say if I own a technology stock, maybe I want to take some money off the table. And then I look at Qualcomm, which I think is a bellwether harbinger for tech stocks. What's that telling you? They supply chips to Samsung, to Apple's devices. They have a broad exposure in the digital communications area. And this stock's been in a downtrend since July. If tech was strong, you would expect Qualcomm to be doing better. Telecommunications equipment, it's not doing better. That's another harbinger to me. Down today on an up day in tech. So how do we know it's an up day in tech? Well, let's look at the triple Qs. And here you see the bullish personality change in the triple Qs. Actually made a new high intraday today, or just failed. But it's up around the triple top area. There was a head and shoulders in the triple Qs, potentially setting up, didn't break down. Tech is in that zone where it could go either way, and I don't think it looks, based on Apple, like it's breaking out. So, Joe, let's take one more question and then let everybody get on with their evening.
Yeah, I think what would go well along with navigating through these ETFs is we have a question saying, now of course within Chaikin there are thousands of different stocks along with a handful, a couple hundred ETFs as well. What filtering options are available to narrow down that list of 1,000 stocks to a manageable list of about, say, 10 or 20 different stocks?
Well, first of all, you can create your own list. So one thing we encourage people is to create user lists, and the My Stocks list is the place to start. We are implementing a cut and paste, drag and drop capability where you can cut the best names out of an industry group or a sector and put them into a list. But it's the dashboard. Remember I talked about the signal dashboard. So here I've got 181 stocks in My Stocks list. And all I have to do is click on the dashboard icon and I see all the stocks that have triggered buy or sell signals today. So here are the buy signals: KBH, General Nutrition, Rite Aid, Tesoro, Valero, all triggered buys. And then on the bearish side, Tesla, an overbought sell, Zillow, we talked about Zillow, Chipotle, relative strength sell, Virtus, which has been quite weak. Here's another example of the casino stocks are weak. So the bottom line is the dashboard can help you find actionable signals. You can create lists. And if you're looking at ETFs, this is the procedure that we were talking about, training our new users on this. You go to the ETFs and you look at the select spider sectors. So here's the S&P right in the middle. Healthcare, technology, financial, and consumer discretionary are above. Utilities, consumer staples, materials, industrial, and energy are below. I want to focus my longs above only if the chart looks good, and consumer discretionary still looks pretty good. And then as we showed you earlier, you want to then go into one of these sector groupings or industry group groupings and find the names that are in the best ETFs. So within consumer cyclical, ranked by power gauge rating, here's the Power Shares Small Cap Consumer Discretionary ETF. I want to see the chart on it to see if this ETF is performing well, and it has been performing well. You had the bullish personality change here in October. Just triggered a relative strength buy signal. So this is a pretty good performing ETF with good potential. Here are all the stocks in that ETF ranked by power gauge rating. This is how you narrow them down. Now I know G3 has been a fabulous stock and it's right at the top of their list. So we help you zero in on the best of the best. If you'd been looking at this in February, you would have seen G3 at 103 on the way to 120. And then you can very easily click and see all the stocks in that particular ETF. Here's Helen of Troy, soaps and cosmetics, consumer discretionary. Some are better than others. You can very quickly zero in on the names that you want to trade. Wow. Lithia Motors. Now, I have no idea what they do, but it's had a bullish power gauge rating off and on. It's been outperforming. So we click on the information button and we find out they're a fragmented automotive industry. So this is similar to AutoNation. They're rolling up dealerships. It's actually looking like it's performing even better than AutoNation, which we love. AM was my bullish stock of the week this week. And that Lithia, which I found just in looking down at these various stocks, is outperforming AutoNation. Now I want to see what the market cap is here to make sure it's a tradable stock. It's a $3 billion market cap, 2.7, so that's tradable. AutoNation probably has a much bigger market cap, so it's a larger cap. Yeah, they have $7.5 billion. But that's how you narrow it down. Now we're going to have a screening and filtering capability. That's coming later in the year. But right now, you can find these names. Wolverine Worldwide, another stock that looked good in Chaikin with a buy signal. another shoe manufacturer, not quite as dynamic as Skechers. Crocs, turning around, moving to the upside, bullish power gauge rating as of mid. Also in the footwear business, now it's outperforming the market. You want to look for a pullback to buy the stock. So this is how we recommend that you narrow it down. There's Skechers on the list. So here's another consumer discretionary, Select Comfort, that I know has been in our home furnishings strong industry group. A lot of different ways to find healthy stocks within Chaikin and also find the weak stocks to go short. I mean, there are stocks you want to be out of and shorting in this market. Yelp. I mean, I can't imagine, other than a takeover, why anybody would want to be in Yelp. Bearish power gauge, underperforming the market. Institutions are selling the heck out of this stock. Down again today on an up day. This is what Chaikin can do for you, and I think that's a good place to end the webinar. Joe, thank you for staying up and helping. I know it's a late night. Appreciate, again, Steve Bigelow, the whole Candlestick Forum team, and the big turnout that we got tonight. Thank you very much, and have a great evening.
Thank you, Mark.
Yes, thank you, Mark. Thank you, Joe. Very good stuff. Again, this is putting into one package elements of everything that you'd like to have as indicators so that you know you're in the right direction at the right time. So take a serious look at this. Basically, it boils down to you're looking at maybe $130 a month. It will produce tons more profit for you than that, that's for sure. All right, everybody, have a good evening. We'll see you in the chat rooms.
Steve, thank you